Hi everyone, welcome to Value. So it's officially happened, Lucid Motors and CCIV, which should be really satisfying, but apparently not as satisfying to the market because the aftermarket pricing is below 30%, which is mind-blowingly shocking, because why is it down so much when the market kind of anticipated and with a lot of excitement about this merger? So why is it down? Like, I'm going to try to speculate why it's down, but I don't think it's as bad as the market's kind of perceiving it to be. So firstly, I've got a lot of articles that are coming out and going that this valuation is about $24 billion in terms of a pro forma situation, because some capital was raised at $15. They've put out a presentation here which kind of simplifies it down. So in terms of the cash source, CCIV provides $2 billion and 70 million, and then they've got private investors supplying $2.5 billion, which is a lot higher than originally, because they were looking at $1 to $1.5 billion. So we've got more dilution, which I don't think a lot of people are extremely happy about. I think people would have been happier for them to raise minimal amount of money, let the valuation run up, and then maybe next year raise a bit more as you need it at a higher valuation. So I think investors don't like this heavy dilution to be starting off with. But I think it's also good for the company because it kind of leads them towards a situation of profitability, which we'll go over very, very soon once we look at the revenues and eventually for the company to get to a profitable stage. So in terms of pro forma valuation, we'd basically, CCIV shareholders would get about 258 million shares, and that's at a $10 price tag. And you've got the private investors, even though they're contributing a lot more money, 2.5 billion versus CCIV shareholders at 2 billion, they're paying $15 per share, which is a 50% increase, hence why they're getting less shares for more money, at 166 million shares. And in existing Lucid shareholders is 1.175 billion shares, which is a 75% holding. And if we bring it up to like a pro forma standard, say like bring up to $15, then hence why we've got a 24 billion valuation at a $15 price tag if we brought the CCIV shareholders at this stage. So basically it's 1.6 billion shares times by $15, and it gives us a $24 billion. So hence why, if you see it in the articles, that's how to get to $24 billion. But if we were to just condense it down to like kind of like a normal standard, it's around about a 16 billion valuation, which is higher than the original 15. And I think a lot of people kind of expected a 12, because for some facts were just floating around of a 12 billion valuation as well. So when a 24 billion valuation comes out, I think it kind of shocks the market in a way. I don't think they digested it quick enough. But that's my view, that maybe that if they didn't digest it quick enough and they were looking at $40 at a 24 billion valuation, then I think the market was kind of saying they're happy to pay 96 billion, but I don't know the market perception of it. But at a $40 pricing, at about a 16 billion valuation, we're just looking just over that 60 billion mark, which I kind of think it's relatively fair for this company, at over $60 billion. And I think if the market is very hyped up, then maybe 70 to 80 billion is still reasonable. I think going to 100 billion might seem a little bit excessive for the company, given the recent slides. But I'll go through these numbers right after I go through this. So they've done a benchmark comparing their 2022 revenues with Tesla, Fisker, NIO, and then the rest of these, which they do it at the 11.7 billion valuation at $10 per share, which doesn't account for the money that they've raised. So in a sense, I kind of feel like this is a pointless comparison, but we'll do the comparison nonetheless. So I think they should be the valuation for the market usually perceives the valuation much more in advance. So we'll look at the 2023 revenues, and Lucid would be at 2.1x at this just slightly below 12 billion valuation. So if we increase this by that 5 times to match it up with Tesla, it basically gives us that 60 billion valuation anyway. So I think that the market is very, very adamant about this 60 billion valuation as being a fair value. So at a $40 price tag, I think you're in a good situation that you don't really, if you're a long-term holder, $40 is good. Or anything less is a bargain in my view, because you're buying into a really solid company, a company that won't be replicated anytime soon, because apart from buying into Tesla, you don't really get the quality of this type of company nowhere else in the stock market. None of the other companies coming onto the market or are already on the market are anywhere as nice and as good as Lucid is. But again, that could be my bias, but I've analyzed so many different EV companies that, yeah, like literally Tesla's so far ahead of these companies, and the only company that resembles it in a good way is Lucid. So hence why the market was so excited, and it's kind of surprising to see it drop 30% on the after hour basis, but I don't think it's a fair view of Lucid. So I think the $40 range is, yeah, I think they want to assess it as a fair value situation, though these companies never sell at a fair value valuation. They always sell at a premium. So I think a lot of people that were interested in this company for the short term have tried to get out because they might have perceived it not to be on ideal terms, of course. But I think if you're a long-term shareholder, $40 is a pretty decent pricing, or anything below that is extraordinarily good. That is if you're a long-term shareholder, of course. Alright, so now down to those really interesting revenue figures that kind of were very similar to what I had in mind, but kind of less. So firstly, I have a problem with this number here. So firstly, they expect to produce 577 vehicles this year, which is really, really low. Like, I think originally there was an article that said they'll produce about 7,000 vehicles. So to go from like 7,000 to 577 is either this presentation is really conservative, or there's been a technical delay in the company's manufacturing, because yeah, like 577 is extraordinarily low. But you know, that's just my opinion anyway. And then they hope to go to 20,000 next year, which I also think is very conservative. But again, if the companies produce this and they reckon that's their production rate, then yeah, like I can't really disagree with what the company says. So I can only really analyze what they have put out. And yeah, 577 is extremely low. I think they should be producing much more. I think the numbers, I think this is a very, very conservative presentation, unless they've got a lot of technical problems that have shown up. But the CEO was talking with a lot of confidence that they would be scaling up in such a much better way than Tesla would. Either he's just talking up a big game, or this presentation is extraordinarily conservative. So in terms of production, they're ramping up from 20,000 to 48,000 to 89,000. So you can kind of see, yes, they are scaling up relatively quick on this basis. And then by 2025, they get to 135,000 vehicles, and in 251,000 vehicles in 2026, which is, you know, like a very, very nice ramp up. And mind you, the vehicles are much more expensive than Tesla's. So yeah, the revenue, they expect about $97 million, and then that will go to 2.2 billion next year, then 5.5 billion in 2023, and 2024 9.9 billion, then 13.9 in 2025, and then 22.7 billion in 2026, which isn't too bad. Like, I think the numbers are pretty good. I think the market probably expected higher. But again, I feel like this is a very conservative presentation. But yeah, like, I mean, it might as well just be conservative about your numbers so you can outperform them, I guess. But yeah, like, I think the numbers, yeah, they're much more lower than I anticipated anyway. If these are accurate numbers at what they actually think they will produce and what they'll actually produce, then yeah, I think it is relatively low. in terms of a benchmark, I think that it still warrants the current valuation at 40. But if they wanted to go up, like if I think the market, in order to justify say like this $57 price tag and then going higher, then this presentation these numbers have to be conservative. If they are actual, estimates with technical problems, then maybe the valuation might not hold up in the short term, and it might, but I think in the long term, relatively still very, very good, because this is one of the high quality companies when it comes to EVs. And in terms of EBIT, so we're looking at negative around about negative $1.5 billion this year, and then next year negative 1.3, and then negative $1 billion, and then negative 150. So you can roughly get an idea that, hey, it is around about that $4.5 billion that they expect to lose, and then by 2025 they expect to gain 637 million in operating profit, which is always very nice to be in. So I basically, their capital raising was basically $4.4 billion, and that is basically to cover their numbers. So yeah, I do anticipate at least another capital raising, because I don't think things work out in the ideal way. There's always delays or expenses rise higher than they anticipated, but if they manage to go to these numbers or less, then they have enough money to go to profitability, which is always really, really nice for these type of companies. So in terms of real world miles driven, they've driven 20 million miles, but this is with the technology. So they supply the technology to a lot of racing cars, and hence why they've managed to rack up over 20 million miles on the technology, because they've managed to supply it to a lot of racing cars. And yeah, they have about 403 patents filed, over 10 years of design, engineering and manufacturing track record, and yeah, the cars are amazingly quick with over 1,000 horsepower. They have a very good battery with that. On one charge they can do over 500 miles, and they've got their factory that can produce 34,000 vehicles, and in with the anticipation that they could get to about 365,000. I think the number originally floated out was about 400,000, so it's interesting that this is at 365. But by then they should have another factory in Saudi Arabia and possibly another factory in China. So if this capacity is limited, it's not too much of a problem, because by then they'll have other factories. They've got about 7,500 reservations so far, which could yield a potential revenue of $650 million. Alright, so in terms of the technology, their battery pack is their basically pride and joy, because they've managed to build something relatively compact and battery pack with density as well, which means it doesn't have to be of a very large size, hence why it's gotten so much, the efficiency of it is so much higher than many vehicles. And the same thing with the motors, it's very small but packs a real punch when it comes to horsepower, and I think just the way it runs is super efficient for its size. So both of the battery pack and the motor and inverters as well, and bi-directional charging, right now it's still fairly unique, I guess, but in about a couple of years time every company should basically have it, where you can basically supply power to your house or take power out of other chargers. And yeah, software wise, pretty standard in a sense, like nothing like probably extraordinary. Graphics definitely look quite nice, of course. And yeah, I guess there's potential applications towards other things. So they do the passenger vehicles themselves, and they can license their technology to other companies doing passenger vehicles. They can do buses, helicopter, drones, aircraft, heavy equipment, and battery storage. So overall, the technology is basically what you're paying for, because when you're an investor in this company, even though they haven't really produced so many production cars, you're basically investing in a company that is going to produce some extraordinary technology, and if they apply it to their own cars or license it out to other companies, that's where the real cash cow is for this type of company. That they built something that's hard to replicate in the near term, and they're going to see the benefits of it going forward. So in terms of Lucid, in terms of are they a direct competitor of Tesla? Not quite. So if the one thing a lot of people have noticed about Teslas is they're very nice and expensive cars, but they're not luxury cars. The quality in them is nice, but nowhere near of the quality of other luxury brands, which a lot of people would attest to. That say like Tesla, Mercedes, Audi still are quite nice and much nicer when it comes to the luxury interiors. So that's where Lucid comes in and kind of goes, we kind of match up to them. Why, even though Tesla doesn't, they go, Tesla's an innovative company but not a luxury company. BMW is a sport luxury company, Mercedes is classic, and Audi is tech luxury, and they are post luxury. So they kind of see themselves in this category that kind of competes with these other luxury companies, and they kind of see themselves as their own category as well. So yeah, I think they're probably right that in a sense they're not quite the competitor to Tesla right now, considering the quality of the car difference is quite big and the pricing as well. So in terms of efficiency, so you can kind of see right here, compared to miles per kilowatts, Lucid kind of just has an advantage over everyone else. Their nearest competitor is Tesla, but going back to this, why this slide matters is because Lucid is post-luxury, whereas Tesla is innovation but not luxury. So anyone looking for a very luxurious vehicle is likely to go to the Lucid. Anyone looking, that's looking for an electric vehicle but not in the luxury category would be going to Tesla. So hence why they have, similar battery efficiencies, but like you compare against like Jaguar, Porsche, Audi, Rivian, and are significantly more efficient than these other companies. Hence why why the market's kind of really excited about this type of company, because the efficiency of this company is extraordinary. Anyone that can match Tesla in terms of technology, it deserves a high valuation, because Tesla is not going to rule the market themselves. There's other companies that can come in and also take part of the market share as well, and those companies are going to be very valuable going forward. Alright, so in terms of cars that they're going to be releasing, so they've got the Lucid Dream, which is coming out at $161,000, and it has a reservation of $7,500 for the reservation. Horsepower 1,080, which is extremely high, but you're paying a huge price tag, so you want something that comes with extra function features, higher performing. And in terms of Grand Touring, 800 horsepower, $131,000, $1,000 reservation, and this is the next car. I think it comes out at the end of the year. I think the Dream comes out in the next few months, unless they have a technical delay, hence why I'm looking at the 577 number, and that being ridiculously low in what they think they'll produce this year. Kind of is a sign that, hey, do they have technical problems while trying to produce the Lucid Dream? If they do, then yeah, I think the 577 units that they think they'll produce this year could be true, which is kind of disappointing, but I think that's realities of technology sometimes. If you're a Virgin Galactic holder, I think you'll be used to delays and disappointments in a sense. So yeah, Grand Touring, is coming out at the end of the year, 131,000, and in the Touring will be coming out next year, and it's at 87,000. And you can see as the pricing moves down, it means more people can start to buy their cars, and mind you, they're still in that luxury category, so as they move down in pricing, there's still going to be really good demand, even though we go like, it's not cars that the average person is going to be buying. Most people who buy these type of cars, like they're ones that are buying from Mercedes, BMW, Audi, and at the very high pricing situations. So yeah, like that's a similar situation to like people. Yeah, like there's not going to be the same demand that you would expect for Teslas, but I don't think they need that demand. And it's it's nice that they're not directly competing against Tesla, because if you're directly competing against one of the most innovative EV companies in the world, that has much more capacity to produce cars and better margins, I think it's going to be a problem. But the fact that they're not quite a competitor, I think gives them a good edge. And also the tech is, as it was put, in a sense more advanced than Tesla's, so I think it's a relatively good situation. And that's why I kind of see Lucid kind of ruling this luxury market, and in Tesla's ruling the other parts of it. So hence why I kind of like this company quite a lot. They produced a skateboard here, which they produce themselves, which kind of is a good leadway, because the minute you produce this tech, you don't have to put as much work into making it that much better. You can make incremental improvements, and that can just lead to a lot more vehicles as well in the future. So they've got 2021 as the Lucid Air, and then they've got another SUV that's coming out in about 2023. So once they produce more vehicle models, there'll start to be greater demand for the vehicles. And again, it just comes back to the skateboard. The fact that they've perfected this gives them incredible leverage in the future to produce whatever type of vehicle they want. And that's what they're going to do. They're going to plan more sedans. They're going to do an SUV, and they're going to do other vehicles. So by 2030, they could potentially have 5 different vehicle types available, which is going to be very, very nice, particularly when you look at other car companies. And the reason they succeed is because they have different types of cars that fill every different market and demand. And yeah, they also have the energy storage system, which is, kind of matching up with Tesla. Like, there's not really many EV companies also going to battery storage, but it kind of makes sense for Lucid, because their best tech is actually in battery. They actually started as a battery company, so hence why they're really good at it, and it would make sense for them to do an energy storage system. And also they can supply the technology, because they've been supplying the technology to racing teams in terms of EV racing series. And then they've got applications for aircraft, eVTOLs, which will be quite big in the future. And they can do it for military, heavy machinery, agriculture, and marine. Though I think those are still in the initial stages, but I think that's where they see that potentially, if they wanted more revenue, they could approach those different areas. And in terms of their factory, they've got a phase 1 built right now, which gives them 34,000 units capacity to produce right away. And then they're doing phase 2 right now, which I think they're getting permits for approval. And it brings them up to 90,000 units produced, which they can probably do in the next couple of years. And also, eventually just basically moving to 365,000 vehicles produced in their facilities. So they've currently got the land. They just don't want to commit so much capital to building up the factory straight away. So they built it in a smart way where they do it in phases, so they're not committing too much capital. And also, if you build a large factory, there's all these other costs that are involved, and if you're not using them, it ends up being like a big waste of expenses. So I can see why they've done it in stages. So currently the target addressable market has a demand of about 1.7 million vehicles. And then as they produce the Gravity, it doubles the addressable market. So hence why you want to produce different types of vehicles, because different people like different cars, and it targets a higher addressable market. They think by 2030 that they'll be producing over 500,000 cars, and that they'll have 4% market share of a market that will demand about 15 million cars. So yeah, here they've got plans to produce a coupe, a premium sedan, a pickup SUV, and a pickup truck. So you can kind of see like they are looking to target every single area. Basically, whatever Tesla's done, they're looking at doing the same thing as well. So in terms of total deliveries, I think we've kind of sort of been through this. That like next year they're looking at doing 20,000 vehicles, and in 2023 they're looking at doing 36,000 of the sedans, and by that time they should have the Gravity in production, which is the SUV, and they should be delivering about 12,000 of those vehicles. But as you can see, like SUVs are surprisingly popular cars, and that's in 2024 that's going to overtake the demand for sedans at 49,000 compared to the 41,000 for the sedans. And in basically 2025, they expect to produce a different model of car. So as you can kind of see, like I imagine they're going to be targeting a new model every 2 years. So yeah, I think it's a good situation, and basically a really, really nice company for the long term. Hence why, like, if you're buying at this current pricing at $40, I think if you're in it for the long term, it's a good price, or anything below that. But of course, if it runs up too high, you just might want to hold back. And I don't think you really want to buy into this company if you're just in it for the short term, because the short term upside might not be as extraordinary as you think it will be. I think a lot of people did buy into this $57 pricing, hoping for it to go much higher. I kind of thought it would go much higher, but of course the presentation hasn't been as exciting as I thought it would be. It's still really nice. It's still really satisfying to see this company come onto the market, but I think the numbers haven't been as impressive as anticipated. But I still think, it's definitely warranting a $40 pricing. It could definitely warrant around $60, but to warrant about $100 would seem incredibly high, given this numbers that have been shown. Like all things, it's all speculation before we see the numbers, and now that we've seen the numbers, it kind of brings it down to earth that hey, $40 is good, $60 isn't too bad, it's doable, and $80 would seem excessive. But I mean, with the hype and anticipation of this SPAC, potentially it goes to $80, then falls back down by a little bit afterwards. But I don't think going over $100 is happening. For anyone that might be hoping that they buy in early, or they buy in now and that it ramps up significantly, I think you'll put yourself at a lot of risk buying it that high, or hoping for that high, given these numbers. But I think overall, a very nice car company that's going to be very important in the future. So firstly, they are targeting North America for the second half 2021, and in 2022 and 2023 they'll target the Middle Eastern area, then China later on, and then they'll start delivering the Gravity in 2023. So they've definitely got a lot of work cut out for them, but if they deliver, the company is going to be in a very, very good situation, and it's really going to justify the current pricing. Let me know what your thoughts are. Hopefully this presentation hasn't been too long. I know that I think there's so many slides that it was difficult not to go through so many of it, and we're at a half an hour mark, so I'm impressed, and I definitely thank you for staying for so long. If the presentation has been too long, I apologize for being too long, but there's just so many facts to go through and to look at this and try to justify where the valuation will be. Hence why I've taken the time. It's no point going through something so quick and in not coming out with a kind of like a very fair valuation. So hence why it's been such a long video. But I think you got most of the details at the start, and anyone that stayed this long, I'm really, really impressed that you've stayed this long, and hopefully you got enough information out of it that you're able to make a decent decision. So yeah, until then, I wish you well, and if you decide to buy in, I hope it goes up. But mind you, the pricing at $40 is relatively fair value. And yeah, like it could get to 60, possibly 80, but I don't think you should be holding onto and hoping for over 100, because that's really highly hoping that, because potentially at $100 you're looking at about $160 billion in valuation. Probably doesn't happen this year, but it possibly happens in the years yeah, like next year or maybe year after, if they can justify and basically outperform their numbers. Like, I think they will outperform their numbers, but I think if we're basing it on what they've provided so far, then yeah, maybe not as extraordinary as we thought they would be, but still relatively pretty good. But yeah, I think I've said enough on that anyway. So yeah, thanks for tuning in. Until then, good luck investing.